webinar. The webinar is going to be based on NFP Friday and how possible different ways that you can trade NFP Friday, the benefits of it, and of course what it is that you need to be looking out for, whether you are a professional trader that has been trading 10 years or someone who's completely brand new to the market. Today I'm going to be speaking mainly on NFP Friday, how it affects the market and how you can trade the volatility. To start off, I would like to welcome everyone. I would recommend everybody has a pen and paper to write down any notes, any questions that you yourselves as viewers and traders may wish to ask. I'll be more than happy to answer any questions, as many questions as you like, towards the end of the webinar. I will send out a recording to everybody who wishes to rewatch the webinar. And of course, again, if you have any questions at a later point, feel free to get in touch with your account manager or myself. So I'm not going to spend too much time telling you a little bit about myself. What I will say is I am the market analyst here at Stratton Markets. I'm a fully licensed financial advisor both in the UK and in the EU. I have been for many years. I've been a financial advisor, market analyst. I've also been a lecturer, been involved in starting up a few academies. But again, I don't want to spend too much time on myself. Now, just to tell you a little bit about Stratton Markets for the traders who are new to the company as a whole. The most important thing is us here at Stratton, we want to ensure you that we are a safe and reliable place for you to be trading. We are fully regulated by CISEC, which is a European regulator, and we follow European laws and regulations. You have the ability both to trade on an online platform, which is very easy to use, and also the MT4. So just a schedule, an overview of what we're going to be speaking about today. We will be speaking about NFP Friday. For those of you that don't know what that is, do not worry, everything's going to be explained in today's webinar. We're going to be speaking about the movements of NFP Friday. We'll be looking at real life examples, different options on how you can be trading it. Also, I'm going to be speaking about the risk and what you need to be looking out for. Of course, I want all traders to be trading responsibly. It's very important that you also have a trading plan and a risk management plan for NFP Friday. All this is something that we're going to be speaking about in today's webinar. So I want to start off just to give everybody a bit of information with regards to trading. It is an investment. Now, with all investments, there is a risk involved with regards to the capital which you have invested, as it is with all investments. Now, my advice to you is to do your research with regards to the risk. Of course, it's very important that everybody is comfortable with the risk involved in CFD trading. Now, what I would like to do is just to start off by speaking a little bit about basics of trading, just a couple of minutes just for all the new traders which have joined our company. Now, here at Stratton Markets, we are trading what is called CFDs. Now, some of you may have never heard of CFDs. CFDs stands for contracts for difference. If I get my laser up, I'll be able to point it out on the screen for you, as you can see here, contracts for difference. Now, I'm sure everybody knows what stocks are. I'm sure everybody knows what currencies are, like the pound and the dollar, stocks like Amazon and Apple, for example. Now, you have an option of as an individual to actually buy the underlying asset or currency. CFDs is very different. CFDs, you are not actually buying, if you use Apple as an example, you're not actually buying the stock in Apple, okay? Instead, you are buying a contract for difference, which is in a sense a product which mimics the real stock. Okay, so the movements in price are the exact same. Now, CFD trading allows you to speculate on the rising and falling of prices. Now, with CFD trading, as I explained, you're not actually buying the underlying asset, but instead you are simply buying a contract which mimics the movement of the asset, whether it is a currency, whether it's a commodity or stocks or whatever it could possibly be. So everybody should be fully aware that they will be trading CFDs. If anybody has any questions with regards to that, by all means, feel free to ask at the end. Also, leverage. Leverage is a massive part of CFD trading. Now, leverage is when the broker is allowing you to control more capital than your actual investment, okay? And what I've done is I've put an example here, okay? For example, if you have invested 1,000 US dollars, okay, and you have a leverage of 1 to 100, that means you are able to invest up to 100,000 in the trading markets. However, the risk, you are only still risking the 1,000 you've invested. So you're not actually risking 100,000. You're still only risking your original investment. Okay. Now, what leverage means is that the market is moving faster. It's moving faster when you're making profits and also when you're making losses. Okay, as I've stated here. Now, also, okay, when you in trading, we need to monitor the currency movements in pips. Okay, anybody who doesn't know what a pip is, it's literally the smallest movement in the currency. Okay, and these movements are just fractions of a cent. Okay, now for example, when a currency pair like the pound against the US dollar moves 100 pips, okay, this is how it would look. This is the difference. Okay, this is 100 pips, so you can see the 5 has moved to a 6. Okay, this is now. If there's a leverage of 1 to 100, you are making 100 times more than that, okay, if you are trading in the right direction. Okay, so margin, equity, and balance, okay. Margin, okay, you will see this on the MT4, you'll see it on the trading platform. The figure margin and free margin, okay, all it simply is, the margin is the original capital which is invested in the market, okay? So, for example, let me get, if you have an account of $1,000 and you are investing 100 of that's 1,000 in the pound against the US dollar, okay, your margin is 100. Okay, now your free margin is what's left in your account, which you have available to you to trade. Okay, so if you've invested 100 out of the 1,000, it means you have a free margin of 900. Okay, now equity in forex trading is simply the total amount in your trading account. Okay, when a forex trader has active trades and active positions in the market, okay, the equity will also include profit and loss and anything which is invested in the market. Now, balance is similar to equity, but it is not including the open profit and loss of your investments. It's only including what is left in your account and your closed profit and loss. Now, going on to the interesting parts. Now, everybody needs to be aware that this coming Friday, 3 days away, okay, is NFP Friday. Now, what is NFP Friday? Okay, NFP Friday is where is the biggest volatility, okay, and most liquidity in the market. Okay, now the NFP report stands for non-farm payroll. Okay, the NFP report is a key economic indicator for the US economy. Okay, and it is intended to represent the total number of paid workers in the US. Now, the NFP report is one of the consistently largest rate of movements in the market. Okay, it creates movements anything from 30 pips. We've seen in history it can create up to 100 pip movements to 300 pip movements, depending on what is being announced, depending on supply and demand and liquidity at that time. Okay, it is released on the first Friday of each month. Okay, and it is basically indicating to the market how much more jobs there is in the US economy, how much is the average earning per hour, okay, and the unemployment rate. Now, anybody, whether you're an economist or not, will know that this is a massive indication of how well an economy is doing. If the economy is doing well, it means that there's more jobs. It means that the unemployment rate is going down and people are earning more on an hourly basis. Okay. Now, investors want to be investing their capital in currencies which have a healthy economy backing the currency. Okay. Now, if the NFP Friday release is positive, okay, investors want to invest in the US dollar. There is a highest demand. Okay, when there is a higher demand for something, it increases in value, which is why the US dollar goes up. Now, if it comes out negative, it will have the opposite effect. Okay, so why is NFP Friday so volatile? Okay, so the level of job earnings, the level of jobs and earnings in the economy is a big factor which investors are looking at when investing. Okay, me as a trader, believe me, it is one of the biggest things that most traders around the world look at. They look at the economy, they look at employment rates. Okay. Now, if the number of jobs and wages are growing, it is a sign, as I said before, of a healthy economy. This results in higher demand and a higher currency value. Okay. Now, due to movement in the market, there are more traders buying and more traders selling. Okay. When there is a high volume, it's causing the market to move even faster and at higher amounts. Okay. Now, if the economic releases are continuously being overachieved to what's being predicted, then traders will start to look at whether the central bank, which in the US is the Federal Reserve, will start to look at changing their monetary or fiscal policy. Now, monetary and fiscal policies have one of the biggest effect on currencies. So this is another reason why NFP Friday is extremely important. Now, what I would like to do is I'd like to show you the last 3 months movements when it was NFP Friday. Okay, so this is one example over the last 3 months. Okay, now I put a little line here just to help all the beginners out there. Now I want to concentrate on what NFP Friday looks like before the news is released on the Friday, after the news is released, and during the news release. Now I think it's quite clear here to see that the news is being released at this time here. So where I've got my laser, this is when the news is being released here. Okay. Now, I've drawn a line here because I want to point out to traders. One of the most known movements in the market before NFP Friday is released is what is known as the curve. Okay, it's a curve of the market, as we can see here. This happens quite often, not always, on NFP Friday before the announcement is made. You see an upward trend and then a downward trend before the news is being announced. Okay, now what I want to concentrate on this slide is this curve. You see it on countless occasions. I'll show it to you on the next NFP Fridays or on the next slide that it happened on the last 2 NFP Fridays. Now, you need to bear that in mind, that happens quite a lot, but you also need to bear in mind that it's not going to happen on every occasion. So there needs to be a level of mitigating risk, but being aware that very often does happen. Now, there's 2 ways which traders can earn from NFP Friday. Number 1 is the trend, okay? As the good news comes out, you can enter the market and attempt to earn your profit from the trends, in which on this case is an upward trend on the pound against the US dollar, okay? So option 1 is to earn from the trend. The news comes out, the market starts to shoot up as it does here. You buy and attempt to earn on the upward trend. Now, no matter how strong a trend is, there will always be what is known as a retracement in the market. Now, a retracement in the market, okay, is a temporary either halt or change in direction in the trend. Now, hopefully you can see it on the screen. The retracement is here, where I've got the laser going up and down. That is a retracement in the market. Option 2 is to earn from the retracement in the market on an NFP Friday and also on any other trend. So you've got 2 options, earning from the trend, okay, or to earn from the retracements, okay. Bear in mind, a lot of the time before the news is announced, you do see a curve, a trend like so as well. Now, if we look at the different months, this is another example. You will be able to see here again the curve. This is the curve here. Now, I've put moving averages here, okay, and I've also put an RSI, which is at the bottom here. I'm not going to go too in depth with regards to how the indicators work. By all means, if you have any questions with regards to it, I can spend some time with you explaining how these 2 indicators work, okay? But as we can see in the previous month's NFP Friday, it also happened back in May also. You can see here, there is the curve before the announcement of NFP Friday. Again, we've got 2 options. We can earn from the trend. We can very clearly see there is an upward trend. Of course, at the time of the announcement is where most volatility will be, and then it will start to slow down, okay? But the upward trend is still continuing. Option 2 is to earn from the retracements. Now we can see a small retracement here, a larger one here, here, and here. So there is retracements in the market. So you can trade the trend, or you do have the option to trade the retracements in the markets. Now, another movement in the market, which is quite common, as well as the curve, okay, is a trendless period. Now, a trendless period looks like so, okay? Now, the movement in the market is determined by supply and demand. Depending on whether people are buying or selling will depend on how the market is going to move. If it is trendless like so, it means that traders, analysts, or central banks, anybody that could be trading the currency is not really buying or selling at that time at such a high level that is creating the trend, okay? So that could be because they don't know exactly what is going to be announced. As we can see here, traders on this occasion, in the previous slide, they saw that it was going to be an upward trend. Now, the reason it started to go down afterwards is because people buying here might most likely be coming out of the market here. It's also reaching a point of resistance, okay? And we can see from the RSI the point in which the market is finding the resistance. Now, as I said to you, on occasions, we do see, before the news is announced, we can very clearly see here that the news has been announced, okay? That we see like a trend that's ranging, okay? This is, again, as I said to you, when there is not many people buying and selling in the market, okay? Bear in mind that this is a 30-minute chart. The previous one was a 5-minute chart. So we got the trendless point here. The news has been announced here, and then we can see it going massively and fastly down. Now, as I have said before, you got an option of earning from the trend. You get the negative news here. It's going down, okay? And then you got the option of earning from the retracement. So it's a very small retracement here, one here, and quite a big one here, okay? Now, well, I'm going to go back to what I said with regards to looking at if the NFP Friday is continuously being negative, most traders will start looking at whether the central bank will revise their monetary policy, okay? Are they going to lower interest rates, okay? Now, we saw 3 very negative NFP Fridays, okay? Now, a few weeks ago, there started to be that speculation of, is the Federal Reserve, the Federal Reserve Chairman Jerome Powell going to decrease interest rates? Now, all traders should know that this week is the rate announcement, okay? So as well as NFP Friday, all traders need to be aware that there is going to be volatility coming up to Friday as well because of the rate announcements. Now, the predictions are by Forex Factory and Bloomberg and many other analysts and websites is that it's going to drop by 0.25, okay, 0.25 basis points. If it drops, it does have the ability to make the market move massively, okay? So everybody needs to be aware about the announcements before Friday also. Again, I'd like to point out that we've seen 3 examples in today's webinar. Right, I'm also going to look at the RSI. What a lot of traders comment about is they want to make, they're not comfortable making a profit and trading the trend. They might have had some bad experiences with regards to it. What they want to do is they want to make a trade based on the retracement in the market or the price correction. So when the trend is ending, as we can see here, okay? Now, the RSI is a great tool which I've used. I mean, nobody has to use it when it comes to trying to pinpoint the point in the market which you will be trading the price correction, okay? Now, the RSI is literally pointing out to you the point is most likely going to find resistance, okay? It's not always accurate, but it is on some points. So you can see it hits a point of resistance here, but it continued going down. So again, I want to point out it is not 100% accurate. Nonetheless, it's still a great tool to be using. So we can see it hit on 2 occasions here. Now, if you entered the market at this point, you would have had to wait a little while before breaking even, or maybe making a small profit. If you entered on the second point, which is here, you would have been on a decent trade and earning on the price correction. And it did correct up to 50%, as we can see here. The movement down, it went 50% up after that. Now, sometimes after NFP Friday, if there is a lack of news coming out in the following week, and the NFP Friday didn't show a real indication of negativity or something positive, what we kind of see is ranging. As we can see here, it kind of ranged for a period of time. Now, if it is ranging, you need to look at the support and resistance and be trading in between that point. Okay, this is what most traders do. Not everybody has to do so, but it is an option, and a lot of traders do so. So again, you need to look at support and resistance if this is happening in the market. Right, so analyzing NFP results, okay? Now, a higher payroll figure is good and positive for the US economy. This results in it being positive for the dollar, okay? Now, this is because the more jobs being added, okay, the more healthier and more robust the economic growth will be. Okay, now consumers who have both money and a job tend to spend more. This leads to growth. This leads to high inflation, which tends to lead to high interest rates. Okay, now this is what traders are looking for. As I said before, investors want to invest their money where the economy is healthy. Okay. So what you need to look at is what is predicted. You've got a choice of many analysts and websites which you can look at predictions. If it comes in higher than what is predicted, it is positive. Okay. Now, an expected change in payroll figure causes a mixed reaction in the currency market. Forex investors witnessed a expected change in the NFP. Excuse me. So if we look at unemployment rate, okay, which is the second announcement, same thing applies. If the unemployment rate is higher than what is predicted by the analysts, okay, as I said before, I use a Forex Factory. If it is higher, it will be negative. If it's a low unemployment rate, which is what everybody, of course, is aiming for, then it is positive. And the same applies to the average wages. If wages are going up, it is positive for the economy, it's positive for the currency. If it is going down, it is negative. Now, what is causing the most volatility is normally the NFP report, but the other two announcements do create a lot of volatility also. Right, using moving averages on NFP Friday. Now, it is a great point also when you're trying to earn from the retracement or the price correction, as I said before. If you don't want to use an RSI, or possibly if you want to use both, so you, if it makes you feel more comfortable and there's extra certainty by using both, you do have that option. What you need to be looking for is a crossover, as I've circled here. Now, I've used two moving averages, a 10-day and a 3-day moving average. Okay, 10-day is the red, yellow is the 3-day. When the 3-day moving average crosses over, it's called a crossover strategy. Okay, it's indicating the point which you can enter the market in order to earn from the retracement. So if you entered here at a crossover, you can see that it did not necessarily go massively up, but it did go up and you would have been in profits, taking into account, of course, you need to take into account the spreads and the swaps as well. But on a chart basis, it is at a higher point in the market than when you entered. So I spoke to you about a Forex calendar. This is what a Forex calendar looks like. By all means, I'm more than happy to send anybody the link to the Forex calendar that I use. I use Forex Factory. Again, this will give you predictions. This will tell you a bit more in depth about NFP Friday also. And it is very quick to let you know of what is being announced. So at the very minute the news is announced, what the NFP Friday results are, that very moment normally they will update the websites and you can see exactly what is being released. So you can trade based on what is being announced. Now, use the NFP Friday, sorry, the Forex calendar also to look at the next week. Risk management and a trading plan. You need to look at if you get stuck into a trade that you do not want to close, that's an if that happens, then you need to look at plan B and look at the next week. You don't want to do this after NFP Friday, and once you got stuck, you want to do it before. Okay, so you got a trading plan that's appropriate. Look at the next week, look at what news is being announced, what economic data is being announced for those two currencies, and see if there is a chance for changing the trend if a trend is going against you. Okay, so I'll also, when you are trading NFP Friday, you need to look at what's happening before, look at what's happening after, as well as at the time the news is being released. Right, spreading the risk with a financial background. Of course, I'm not advising anybody at any point in this webinar, but as a background, as a financial advisor, I want to make sure that everybody is mitigating their risk, that they have a trading plan, they have a risk management plan, and they're fully comfortable with trading as a whole. First things first, don't guess what is being announced. Some people I've met in the past have a habit of just guessing the release. Is it going to be positive? Is it going to be negative? And they make a guess. Don't do that. It is gambling. It's a 50-50 chance. You don't want to be doing that. Analyze previous announcements. Analyze what is being released in the market. And the movements on the chart. So both fundamental and technical analysis, and then make a decision based on that announcement. Okay, so make sure that you're spreading the risk. You are not only trading the dollar, that you are trading possibly commodities or minor currency pairs, cryptocurrency, stocks, shares, whatever it could possibly be. If you're, of course, only trading the dollar, if you're especially trading it going one direction, as I said, you are increasing the risk, okay, because you are placing all your eggs into one basket, in a sense. So it's very important that you're spreading the risk, you mitigate it across a selective assets. Wait for the trend to form. If you want to trade the trend, don't try and enter before there is either a trend. So that's going back to do not guess. By all means, if you do want to, that's fine. But again, it's not recommended by most traders. You must take into account the swaps and the prices of the trading if you want to be holding the trade open for long periods of times. And then, of course, look at the week ahead and the plan B if you need to take that into account. If you get sucked into a trade that you can't get out of or anything like that. Now, that brings us to the end of today's webinar. I hope that gives you a basic insight of what NFP Friday is, the movements in the market. As I said, I want to keep it very, very basic because we do have new traders every week, as well as the experienced traders. If you have any questions or you want me to go a bit more into depth with regards to NFP Friday, by all means, get in touch with me. You've got my email here or your account manager. Now, just to go over, NFP Friday. It's been released this Friday. It's released on the first Friday of each month. It creates massive volatility. If you are looking for volatility, that's most likely where you need to be trading. If you're not looking for volatility, then most likely you want to be staying clear. But yes, we've looked at the last 3 months movements on the charts at NFP Friday. And any questions that anybody wishes to ask, by all means, they are able to do so now.